Hello, traders. How are you doing? Very good morning here in Mexico City. My name is Alberto Alvarado. I'm broadcasting from here, from Mexico City. And today is Wednesday, August 31st, 2016, the latest day of August. And yeah, we're getting closer and closer to year end. It's amazing, right? I just remember when this year started and we are starting to prepare the closing. So it's amazing how fast the time passes, right? I would like to thank you all, and I would like to extend a big thanks to Binary.com that allows me to share my insights on the markets through this platform with all of you traders. Hopefully, this will give you some inspiration to take the inspirational path into this very complex trading world and to generate your very own personal ideas and perceptions on the markets. That is what it counts when you're looking for uh, knowing how this world moves and how uh, this industry is about. Here, the one that you see in my picture, of course, is me myself, and I believe it's time to start the webinar. So, something interesting to read. Here we go. A little bit about me. I'm going to be really quick here because I need to update a trade that I just opened. I want to share it with you. Quickly, a little bit about me for the ones that are unaware. My name is Alberto Alvarado, again, broadcasting from Mexico City. More than 10 years of experience trading the markets since 2005. I started losing my first live account of $10,000 in less than a month. But that let me know that this is something that I want to take seriously. So I dedicated a lot of time to start developing my approach to the markets. 2007, I started grasping the first rewards on the effort of this learning curve, just to lose it all again, the 2008 crisis, and then I had to decide to continue or leave it. So I decided to continue, but I realized the need that I needed to start everything from scratch and trying to push my limitations a little bit further. So I dared to include some intuitional and creative elements besides some other traditional ones like the traditional indicators like MACD, RSI, stochastics, and it resulted it worked for me, and this is pretty much the things I share here is more or less how I understand the markets based on that. Besides, I don't believe in custom indicators that you have to buy or you have to be checking every time. I sustain firmly the idea that a trader is the one that needs to learn how to adjust to different trading conditions and not the indicators. So I guess it's pretty much everything about me. So let's continue. For the ones that haven't subscribed to my free YouTube channel, I strongly suggest you to do so. You go there and you type IIIBB's Trading Room channel as it is in here. Then my picture will show up, and then you click subscribe. Here is where I usually tend to update things that are important through since these webinars are in a weekly basis. At times I need to update overall when we have open trades to keep updated all of you in any case that we decide to close it in advance or to adjust it or to open another one, etc. So in this case, this channel has been inactive like a month or so because we haven't opened any trade in the webinar, but today is the exception. In some seconds, I'm going to show you why. So if you're interested in receiving in real time the updates on these trades that we're going to open next minutes, I strongly suggest you to go there and subscribe. And then if I decide to close it or whatever, there is the way that you will receive the updates. Well, before starting today's agenda, I need to go forward with what I was telling you. Okay, here it is. I'm going to explain you next minutes why I will do this. But Since I don't want the price to move so much now from this very, very good price, I'm going to open two trades to the upside on the cable with two different expirations. September 7th, that is next Wednesday, and September 14th, that is the next Wednesday. I will explain you in the next minutes why, but I don't want to skip the opportunity to open just at this very good psychological level, as you can see here, the 131. So, for the ones that are not familiar how to open a trade here it goes. You go to binary.com, start trading, you choose Forex, in this case cable, and what I am going to open, I need to disclaim that this is how I understand the markets, and you're very well invited to ignore this signal, to take the counterpart of this signal, or if you, by your own means, you are convinced that and you share my views on this, well, you're free to follow this, but just to clarify that this is only my opinion, right? So, well, the pound up and down, you choose rise and fall, start time now. The payout, well, you put the payout that fits your risk tolerance and all that, and the ending time is September the 7th, as you can see here, and higher. That's an immediate confirmation. You can see here the details, how it's going to evolve. As you can see, there is no need to start watching every tick of this trade, since the expiration date is in 7 days. So we're done here. The second one is the same one, the cable, up and down, rise and fall, start now, end time September 14th, in 14 days. And the payout, well, again, the one that you feel comfortable with, and high. Again, immediate confirmation. And here's the way you see it. You see the contract information here. This trades, when I keep the follow-up in the next webinars, I will show you this exact information, that you see how this in fact evolves, and if this ends up being closed in a profit or a loss, or if we decide to close it beforehand, you can check that it's the exact same trade, and there is no trick here trying to cheat on you, trying to make you believe that maybe this was a trade and it was profitable and it's another trade. No. So there is no need to, at least not for me, there is no need to lie on this. So, well, I believe I will just stop sharing the screen. I need to explain you a little bit why I did this. First of all, because it's, I don't know where to start, because I need to take on from the last webinar. If you are not aware, you're very invited to go to the YouTube channel of binary.com and then check out my previous webinars, overall the last week's webinar, because I was explaining a lot of the stuff on potential cable trade that we were going, at that time I said we are going to wait for a pullback between the 131 and the 130. Actually, that happened yesterday and today, to open a trade to the upside. I've been kind of following how the cable's been behaving these latest 2 months, for the ones that are aware of that. And I will explain you in the live charts exactly the debt levels, etc. But this pullback happened, and I said last week that if that happens at some point, for the ones that decide to go to the upside, well, that was a very good price to take a shot in those kind of trades. And this happened. I am 1 week after, I'm still holding a bullish bias on cable. So that is why I just want to start with this. And now it's explanation. Well, today's agenda is not going to be about this latest week fundamental highlight, because the real fundamental highlight this last week was Yellen speaking last week. Basically, she was more hawkish than expected. In the other hand, the markets have already discarded a very soon Fed rate hike. There is no uncertainty anymore if that's going to happen. Actually, the only difference is exactly when, and exactly when is irrelevant. The markets are very, very, at least now, happy to know that this is going to happen. The probabilities now after Yellen words are, if I'm not wrong, in December more than 50%. I've been saying in other webinars that my ultimate and the let's put it this way, I would be surprised to see the Fed not hiking at least in December because last year it happened. So what the Fed is most likely, and why Yellen, the Fed is trying to and keep this speech on we're going to hike the rate soon, we're going to hike the rate soon. It's because that is the only thing that they can do now to start to try to minimize and to mitigate a potential volatility. They are really trying to play it very carefully, these rate hikes, because they are aware that maybe the only country in the world that it's performing accurately in the economic side is the United States, and pretty much everywhere in the world are not facing the exact same scenario. So they are very aware that if the volatility increases and if they send the wrong message that we're going to see continuous rate hikes and fueling the markets with the complete uncertainty when that could affect negatively actually the American economy. So what they are trying now to do is to pave a little bit the path to give more certainty to the markets and to mitigate again the volatility that could happen after deciding or after having a very good non-farm payroll number. But the idea is that it's only preparing psychologically the markets that this is going to happen. It's a reality, and in the other hand, there is no need to start selling everything and buying the dollar because that's something that the United States doesn't want to happen too fast in few months. They want to more or less keep the equilibrium so everybody could have the chance to adapt. The United States cannot wait every economy just to be to be performing correctly, to decide on their very domestic monetary policy. But what they are really trying to do is to make it as soft as possible, allowing every actor in the arena to adapt uh, the best way they can. So discarding that the market's already aware and are more than convinced. 3 months ago, even people were saying that this year won't have any rate hike, that maybe in 1 year, etc. We've been holding in some other webinars that my expectation was that it was not going to be later than December. And this latest non-farm payroll number last month, well, 3 weeks ago, was very good. Actually, it almost discarded any doubts. And then these Yellen words helped the markets to accept the fact that this is imminent. It's around the corner, and it's pretty much useless to exactly try to predict the date. The thing is that it's going to be very soon, and the markets are happy knowing that. So what we're going to do is try to analyze what we can expect on Friday. And this is very related to the trade that we just opened today, because these trades are not risk-free, of course. When you come into this industry, you know that risk is inherent, and in life, the old rewards are inherent to the risk you're taking. It's the same thing here. The difference that in trading, what is expected is that you uh, take educated risks and that you know how to manage that. So if you saw I didn't open 10 trades in the bullish side, I usually for the ones following me for long enough, you are aware that I usually don't open two trades at a time. But this has an explanation I'm going to explain in some minutes. So, well, what we're going to talk about in these Fridays non-farm payroll number, what we can expect, and why it will be very strange to have not a very positive non-farm payroll number that would simply put December almost at 100% of probabilities of a Fed rate hike. Then the price action opportunities derived from that, that's already been reflected in these two trades that we opened at the beginning, the two bullish two trades on cable for the ones that are just signing in. The trades that I opened here live, it's two trades to the upside on cable, expiring one in September 7th and the other September 14th. Well, the live trades, we're going to check the live levels and how all this looks in the live charts. In this case, we don't have any previous week's trades, so there's nothing to review adjust. But the ones that we just opened today, that we're going to check how they look next week. If we don't decide beforehand to close it or whatever, through my YouTube channel. And at the end, questions and answers. You have some question and answer during the webinar. You feel free to drop the question in the chat box, and Sharice will share those questions to me. The non-farm payroll this Friday, more or less the number that the market is expecting is 187,000. Okay. These blue things I'm not going to explain again what I do every time. These are what I call fundamental dynamic levels. This is like a Bollinger Band that integrates fundamental data and reacts very, very smoothly because of that. So it's not a traditional Bollinger Band that if the price moves a lot, then automatically the band moves. No, actually, these kind of levels are reliable to help you to figure out a plan, because they tend to prevail even though you have a lot of volatility. So this is why we, before opening anything, we check all this. So, well, as you can see, the latest two non-farm payroll numbers were not only above the expectations, but above this midline. As you can see, very slightly, the latest year, this is 1 year of non-farm payroll data, it's slightly pointing down. That is why even analysts are even waiting that the level should be below this level in order to justify that the non-farm payroll number could be to the downside. But these latest 2 months has been closing above this midline. And even though the analysts are still expecting a level, a number more or less this level. So the worst, basing us in the latest 2 months, it would be very difficult that we find and then we get a very lower than expected number in non-farm payroll numbers. So the worst case is that maybe we could expect to have a number like in here, very close to this midline. So even though it's below this, it's very, very close to it. And these 2 previous months, the level was well above. So that is why I expect that the market will read and will read very positively this, because it would only take to be slightly above than expectations to have 3 continuous non-farm payroll data above the midline. So the more times you have these levels, these numbers closing above this midline, they will start shaping this to the upside. And since this is 1 year of data, this counts a lot, because actually it's almost flat, this line. It's slightly to the downside. So these latest 2 numbers are signaling us that actually the Fed is telling us the meaning of that, because we're having these numbers and it's relating to the Fed speech. So this shows us how strong these numbers are in the long term. Again, I expect that the worst case scenario that we could see, the worst case scenario for me this Friday is that we will have the number aligned with expectations. For me, that would be like the worst case scenario. And when you put that in context with these fundamental levels, that would be a very good number. It would take only to have a slightly above than expectations and would be an outstanding number. In my personal opinion, what I expect is that we will have almost this kind of numbers between 292 and 255,000, more or less here. So when you put that in perspective, you see that that will could be a very good number. Of course, this is my speculation. I don't have any crystal ball, but this is what I believe. Why? Because the American economy has shown that the authorities there are really, really good at what they're doing because it's the only economy in the world that's doing this. None of other economies are really showing this performance. And again, the speech by the Fed is explaining us that something big is happening. Because we didn't have that those kind of speeches like before. If you see, this is 1 year. This is where is December? It's more or less here when we had the previous. This is here when we had the more or less the first rate hike by the Fed last year, and I want you to see that at just exactly the same levels is when the Fed starting having a much more hawkish speech. That is not coincidence. Now look how different it looks when you see the distance between these 2 months above expectations. This is the pattern, okay? 1, 2, 3 above the midline, and we had a rate hike. 1, 2, we could have a slightly lower, or at least here, and that would accomplish at least that simple pattern, 3 above. But look at this. Now this line is below this, and this distance is way higher than this. So that is why it's almost impossible to wait for next year for the rate hike. That's why I've been holding. I didn't have this data beforehand, of course, but I had that feeling that the United States economy couldn't justify to keep waiting more than this year because it would be a very good signal for the markets to let them know that at least every year, if things are right, in December, they will hike the rates. It gives back a lot of certainty to the markets. So that is why for me it's like the only clear signal. December is December is December. Not February, not March next year. It's December because history tends to repeat itself. And last year was December, and we're starting to have even more and better data than last year. There are some people that believe that we're going to have in September that rate hike. It could happen, but we need to wait. But I believe that this won't take more than December. Using these fundamental dynamic levels, I'm going to do the same analysis last week because the bands haven't moved pretty much. But what had moved is the price. So, well, this is the very long term. This comes from pre-Brexit levels. As you can see how this line has been moving slightly to the upside because the market failed. Here it touched the 128 and here it touched the 128.50. Here the market didn't have the chance to really break the 128 lowest level after Brexit. And look the effect that this price action has had on the fundamental dynamic levels. This band has been gradually moving to the upside. Now we are in a clear move to the upside. And this latest maybe 2 weeks, the price has stabilized surrounding this mid band. Now we're slightly below, but supported by this 130, this zone, and the 131. This is one of the reasons I decided to open the trade now. Besides, last week we called it maybe the 131 and the 130, plus another aspects of those levels were for the buyers, for the bulls, a good opportunity to start looking upwards. For the ones following me again for long enough, you know and you remember that we've been tracking. This is a multi-decade support zone. So the market what's done after hitting the 128. By the way, we call the 128.50 like the most likely bottom of this sell-off after Brexit, and actually the market stopped at 128 and started moving up, consolidating. Here is the Bank of England decision of cutting the rates. The market responded to the downside to the 128, 28.50. So the lowest level after Brexit was respected, and that's very important. And the market stabilized. And the more time it passes, and overall, in the meanwhile, this line was moved to the downside. We could have some hesitations that maybe the market could continue going convincingly to the downside. But since this has had the opportunity to start to look upwards, then the probabilities are now to the other side. Only talking about fundamentals, because price action can, and the markets, if the markets have told us something, is that everything is possible. You can have a 10% drop like post-Brexit in the pound. Yes, that is possible, but it's very rare. It's very strange. Usually, as been demonstrated in other webinars here, the fundamental levels tend to be respected and tend to represent a very strong support or resistance. This is only a close-up. Just want to check this out, how this is the post Bank of England decision on cutting the rates, how the price respected this lower fundamental dynamic level, okay, and how this had the chance by itself to start pushing the price to the upside. And now, even though this is it comes, I have the date here. Let me check it out, just to give you exact dates. Okay, here it is. This previous one comes from Brexit data, that is June 23rd. Okay. The second one comes from July the 5th. So from July the 5th, you can see that actually this tried to move up and then it's moving down, mostly likely because after this Bank of England decision, but the market managed to reach the mid-band and to break it kind of convincingly to the upside and starting to have separation, convincing separation here, because the more this accelerated the movement to the downside. But then this managed to stabilize above. So actually this gives this a potential bullish momentum in potential. If in any case this happens, this is like potential energy here that it's being generated. The market, last week we said that we were expecting the price to hover between the 131 and 130 because of these reasons, and that this could mean a very good support zone overall, because the multi-decade support has been confirmed by the fundamental dynamic levels and the price action after Brexit. This didn't happen immediately. Opening a trade just because something is at a psychological level, it's not a wise thing. Psychological levels like the 1.3 need to be verified by the price action itself and the history behind it. So it took almost 2 months after Brexit, yes, 2 months and a week, to actually start having confirmations that the 1.3 really worked to stop the sell-off on the pound. These charts come from July 14, that it's pretty much the same. No, this is, yes, July 14th. Now, the price, as you can see here, is below this line, but differently from the other, this switch it from pointing to the downside to the upside. Again, look at this. This is very important. The price, these are closing levels. This is not a candlestick or bar chart. This is closing levels. When you read fundamentals and when you try to apply it into this dynamic, the most important number is the closing data. Why? Because there is no need to analyze forward. Because since this takes time to shape, only adding uncertainty with other prices won't help. I don't, before getting into the fundamental dynamic analysis, I believe that only considering the closing prices was overestimating the power of the close. But actually, it depends on how you use it. At times, you need to use the open, at other times, the closing, and the other times, the best thing is to consider at least four: the open, the close, the high, and the low. In this case of fundamentals, and since these fundamental dynamic levels are drawn after a whole day, it makes sense just to consider the closing. And look at this. The price actually, if you see it here, is at 128, and the 128.50 is where this is stopped. But actually, this closed here. But this gives you an idea how accurate these levels are. What are the fundamental dynamic levels? The prices where rationally the price feels comfortable with moving based on a reality check of the fundamentals worldwide. So volatility, it's irrelevant. Here, what you see, it's like the synthesis of what is really happening. This really helps to grab the real meaning of what the market is doing and why and when it's a good idea to, for example, if you're hitting here a support, no matter how bearish outlooks you have, if you're going to short at this level, you really need to be very good at it, because the most likely thing is that this support will eventually help the price to move up, or in the worst case, to stabilize here and gradually start moving down. You need a lot of volume to move this in your favor, unless you're facing a bubble like the one in 2008. So, well, here we have the level 131 below the line, but this is moving up, and look at this. The zone we talked about last week, 131 on 13, is just inside here. The more time it passes, and this is important, the more time it passes, if it gets to the 1.3, actually it's much better. That is why this area is a no-brainer for the ones that hold a bullish bias on cable. Because from now on, even if we have a super number by the non-farm payroll number, the most traditional reaction in this is going to be to have a sell-off here. But look this number. This really has the power to stop the sell-off. Why? Because the good thing about Yellen is that the market's already discarded a rate hike pretty much soon. So the prices that you're seeing now in cable are already factoring in the rate hike. And then when you have that, what next comes to play? That the pound is oversold because of that Brexit drop. Why it's oversold? Because we didn't close the weekend gap after Brexit. The 1-3 showed us that was working and actually worked as the multi-decade support that it has been for the latest 30 years. Price action confirmed that, and the fundamental dynamics. So now it's really tough to have the 128 to be touched again, because everything reverted. Everything can happen, yes, but if this continues moving down, something really needs to happen out of the box to switch rapidly the perception of the market. The market, it took 2 months after Brexit to have all these alignments. And when these alignments happen, and you know how to read them, because it's not that easy, when you know how to read them, it's like having a compass of what a market's really looking for. then the immediate level that I am expecting to be closed, because of the logical one is the 137, that it's where the gap happened the weekend after Brexit, that we didn't have the chance to close it. It is healthy. That is because that's the only reason why I'm been tracking and waiting a bullish trade opportunity on cable. Because it's the only one out there that's still missing to close that gap. So it's like a no-brainer. If we manage to open a trade and to time a trade to the upside in the correct way, the market will look to close on 137. So you are in the 131. You can creatively apply this into other kind of trades in binary.com, touch and no touch configurations, close above, etc. That's up to you. I only give you some, what I think, how I, and the things I see. So, well, you can see, even if we have not a payroll number, very good number, we have a sell-off, it will have a very hard time to break the 1.3. Why? Because it's already factoring in. So yeah, the 131 to 130 should work. This is a closer look. This is pretty much the same. The 1.3 now it's at this level. So as you can see, the 130, the 1.3, it's not only a psychological level, but a fundamental dynamic support level besides being a multi-decade support one. This is a closer zoom. I mean, the closer you get the analysis, the less relevant it is, but it gives you an idea. For example, this is from August 15, precisely August 14. Look, it moved to the upside. Then we hit some resistances here. The market managed to start folding this to the downside, but look at this. It started folding to the downside, but this actually started entering into range bound these latest days, even though this started moving to the downside. Here you can, since you are analyzing less data and less relevant, here you can even have a drop below the 1.3, even to maybe the 129.50. That could happen in very volatile situations. But actually, the price to look and to feel comfortable with is a 1.3. At least in the way I understand it, the 1.3 just passed all the checkout characteristics for me to consider it a very hard ball to roll in order to continue to downside. This is the more traditional way to read the markets, the candlesticks with some patterns. Here what you have is a double bottom pattern that starts from the previous Brexit. We have the first wave, the second, and the third. We have another ruling pattern here that it's a broadening downtrend channel. Some days ago, we detected this resistance. The market responded to the downside. And then here, besides having all those fundamental dynamic levels, besides knowing that's a multi-decade support for the latest 30 years, we are having the Bollinger Bands stabilizing. Just look how this Bollinger Bands open, how they've been entering to neutral or at least acceptable volatility territory. This is a daily chart, by the way. And we are sitting on the mid-band. So mid-band plus fundamental dynamic justifications, price action justifications, multi-decade support, fundamental dynamic supports. So yeah, actually, apparently the bulls managed to build a decent support here. It took a lot of time, but well, look at this drop. Of course, when you have this kind of drops, justifies that it would take time. Actually, this was built very quickly because this had chances at some time to continue going to the downside. The only thing that I don't like that much that we still have the MACD below zero, and we're just trying to cross to the upside at times. And when I say at times, it's 45% to 55% of the times. When you had that, it's a good time to sell. But since why I believe that won't happen this time, because all what I just explained. And if you ask me, it's way more important and relevant how do you read the story, putting it in context with the fundamentals and fundamental dynamic levels than a single MACD. So yeah, what would have spooked me is to have these levels being retested here and having a sudden accelerated drop, and seeing that the one between the 131 and 130, because of the fundamental dynamics, they really don't show strength and strength to hold the bearish attempts, but they have. So yeah, that is why I just decided to pull the trigger on this trade and just share that with you here. We're going to the live trades. Okay, here it is. Here is a chart. This looks pretty much like the picture. I just took that picture minutes before the webinar, so conditions haven't changed that much. We just have a very good movement to the upside at some hours ago, apparently based on some good data in Europe that were short-lived because, yes, are in mainland Europe, not precisely in the UK. But this is what I was telling you, okay? These latest days, we see here a very good support. It would be to retake some other webinars, but quickly we had Brexit on the first level where the market stopped after having this weekend gap is these levels where we are now. Then we had the second attempt to continue going to the downside. We detected the potential 128.50 reversal point that is more, and the market moved up following this very clear exhaustion setup in the Bollinger Bands, that is having this case the bands being broken to the downside. The movement continues, but not being able to continue breaking the Bollinger Band to the downside. So when that happens, we could face a reversal. Besides the 128.50 potential reversal point, that is why it reverted to 128. Then we have here, if you see this is the volumes. Here we have the best UK labor data in the latest 14 years, and then bam, all the massive flows started flowing into the cable again. Then the market didn't manage to hold these previous lows before that very good data here, signaling us a sell signal that started here. Not active signal, but a selling signal that was passive. The market started moving up. If I'm not going to open that now, but at that time in the webinars we analyzed that in the 1 hour the volumes were to the downside while the movement was starting moving up. Markets looked for refuge at that time. Here we had this resistance of at that time triple bottom, and we had a lot of fundamental dynamic level resistances here. The market, no coincidentally, looked for refuge there just before the Bank of England decision, that by the way we called it correctly, that they were going to slash the rates. The market responded to the downside. It started doing some strange stuff at 130, and that started telling me that actually in the 130 were starting to happen interesting things. We have a slight continuation to the downside, and then boom, we have the price with no hesitation moving to the upside here, where it stalled for a bit at this very level. Is this one where we received that very good data by the UK labor market, where we received at that time that selling signal. Then we here started having very strange price action in the intradays, and then the market then responded again, taking a little pause here, and then boom, demonstrating that it broke it convincingly, retesting again this level, sitting on it again, while, and this is very important, while the midband of the Bollinger was here, exactly coincidentally being here the markets where it took some more momentum to the upside, took a break because of this resistance, and then it's sitting again at these very same levels. So this is why what I mean with reading that history behind the price action that justifies a outlook in a context of a fundamental dynamic level. And besides a 30-year support. So yeah, it will be for the bears, and there are bears everywhere. If you're one, the only thing that you need to consider is all this. You will face a lot of problems, at least now, to attempt moving this to the downside, even having volatility. What I expect if we have a very good number, non-farm payroll number, to have a sell-off. The worst thing that could happen is to this Bollinger Band, and then moving up again because of all those fundamental supports that we just mentioned. Because besides this is a like the zone of multi-decade support, we have a daily lower Bollinger Band here. So yeah, it looks very tough that this could be easily broken to the upside, to the downside, sorry. Why open it here and not waiting on to the 130? Because this is a correct zone. You don't need you don't and overall trading with binary.com, you only focus on the direction. You really don't have the need to grab it at the very top, at the very low. Is you measure the direction and you try to anticipate the time. And since you're trading, in this case, we're trading or trying to trade inside the fundamental real expectations, the market, if we are right, will move gradually but accurately. If we got it wrong, well, we just close it and that's it. We can't get it all correct. So yeah, in any case that you decide to go and maybe you don't have the time to check the updates if necessary in my YouTube personal channel, if you see the price sinking here, don't panic. Actually, I won't change and I won't close the trade or update it until Monday because I need to see how the market reacts after, not minutes after, but at least 24 hours after, and then decide why opening it here, because if in any case it really, the price action really starts pointing a downward direction regardless of the fundamental dynamics, because of how long this took to build this support, the probabilities of having the price retesting the 130, the 131 or something like in here because of all this history are very high. And in any case, if this continues going down, it should try to retest here and then selling off like what happened here. We had bullish signals here that were denied here and the market started moving up to allow the traders or some big institutions to start getting rid of or those or diminishing the bullish risk here. So since this has happened in this very tight trading box, I expect that even if we are in the wrong direction, we could be able to close it within 1 week in break even. But we shall wait to see what happens. And if we have some questions, Shetty? Okay. Well, I'm informed that so far no questions. So remember that you have any questions, you can in my YouTube personal channel. You can go there and post it in any video, and I would be very glad to answer to you, or to send an email to binary.com, and then they will be generous to let me know if you have any questions. So I believe I'd call it a webinar. Again, just to stress out, in any case that you see this trade goes against after non-fi payroll number, remember all what I just said. We have several supports now at this zone. So the most likely things that you see this sinking is only volatility. This wouldn't change, or the most likely things that shouldn't change the fundamental bias. That is the way that we are trading the binary options through binary.com. So again, my name is Alberto Alvarado. I would like to again extend a big thanks to Binary.com for allowing me to share my insights through their platform, and all of you for being around. And remember that we're going to have our traditional webinar next week, as always, at the same time. Through here, you will receive like today, an email before it starts, so you can plan your timings. And in any case that you are not able to show up on time, you can go to the YouTube channel, and check the Binary.com channel, and you will see there my recorded webinars. So thank you very much, Shadis, for hosting. Thank you very much, everybody, for showing up. And remember that I expect you next week, same time, same place. Stay safe, be safe, and bye-bye.